Hello my fellow investors and welcome back to the viewer requested fundamental analysis video. Guys, let's spin this wheel to see what company we should analyze today. And we got the company Lyft. Now, okay, I don't know if this is the taxi thing like Uber, but still, I don't know if we can actually do it. If it is that one, I don't know if we can actually do it. I don't think we have enough data. Nonetheless, though, this one was brought up by none other than, if I can find it, Red Firefly once again. I think Red Firefly has become the new Tony. So, yeah. All right, let's take a look at this company, guys. Oh, here's the comment. And let's take a look at this company. Let us see if maybe the current share price is a buy. Let's take a look at their fundamentals. And if they just had earnings, we can take a look at those as well very briefly. So with that said, let's get started with this analysis. So yeah, this is actually the company Lyft, the ride sharing company. So yeah, okay. And also to my surprise, you do have a lot of numbers for this. So we can actually do an entire thing when it comes to this one. So let's get started with this. Now, I'm not going to necessarily say what the company profile is. I'm pretty sure everybody knows. So let's get started with, of course, now their earnings. Now, they did have earnings as of August 8th. I'm not going to show them, guys, but I will link it in the description below if you guys would like to read it for yourselves. But I'm not going to cover them right here. It's a little bit far away. It is what it is. Plus, I think we'll get the general gist when we go into the fundamentals. EPS normalized actual coming in at 16 cents, beat by 16 cents. So they were expecting 0 for that one. And EPS gap actual, negative 30, beats by 16 cents. Revenue of 1.02 billion, misses by $1.78 million. So let's take a look at these fundamentals, or at least the spreadsheet. We got the ticker for LYFT, market cap of $4 billion, a PE of NA. Obviously, we saw this because, well, their EPS gap actual is negatives. Now, this is a current share price of $9.94. If we take a look at this graph on the 1 year, they're down 32.33. Year to date, they're down 10.61. You can see that, well, what? Wow, why did that just drop as of February 7th, the day after my birthday? That's interesting. And yeah, they fell from 1793 all the way down to what they are today at 995. And you can see that the 52-week range, it is 785 to 1836. Now, if I'm not mistaken, I do believe that this was a hype company back in like 2020 and 2021. And if we take a look at this, we can actually see maybe the 10-year graph. Yeah, right there. Look at this, guys. Look at this. Well, first of all, this thing IPO'd in 2019 at 74.45, and we can see it just fall down. But you guys can see that right here, as of October 26, 2020, this thing jumped to 66.56. That's an insane jump. That's a massive hype. And clearly, it wasn't worth that at all in 2021. And, well, the graph kind of shows it. Now, if we come back over here, we can see that they don't pay out the dividend, which means all of this free cash flow is going straight into themselves. 5-year average, it is negative 527 or negative 528. The last year's free cash flow is negative 352. So even though it's in the negatives, it's at least, by the looks of it, it's at least heading into the positive direction. Now let's take a look at the fundamentals, starting with the net income. We got 5 years ago of negative $911 million to 1 year ago of negative $1.6 billion. That is a decrease of 74%. And yeah, guys, I mean, okay, we can see that this is somewhat heading up, but I don't necessarily know where this is going. And the fact that it's in the negative, it's not really that attractive. So I'm going to say at around like a 20%. Looking now into the free cash flow, they had one really bad year, which was 3 years ago because of COVID, so that's perfectly understandable. But even still, well, actually, I guess if you think that if you take out COVID from 5 to 2 years ago, it is slightly increasing, but as of 1 year ago, it went down slightly. We got 5 years ago of negative $349.4 million to 1 year ago of negative $352.3 million, a decrease of only 1%, an average of negative $527.78 million. So this is weird because it is heading in the right direction, but as of 1 year ago, it went down, and with the economy the way that it is, probably still going down. So I'm gonna have to say, guys, I'm not gonna give this like a 50%. I have no idea where this is going. Looking now at the revenue, it's actually looking somewhat interesting. We got 5 years ago of 2.16 billion to 1 year ago 4.1 billion. That is an increase of 89.89%. And aside from the outlier here from the spike 4 years ago, you can see that this is actually pretty consistently increasing. So I'm gonna say around like a 90% on this one. When it comes into the assets minus the liabilities, this is just crashing down to the ground. Still in the positive, but still crashing down to the ground. Average total assets, it is 4.83 billion. Average liabilities, it is 3.5 billion. Doing this difference, we get $1.33 billion in the positive. Overall, I do not like the way that this is heading. So I'm gonna think, guys, I would say at like, I don't know, like a 10%. Cash flow minus the liabilities, well, it's heading down. We had 1 year of it going back up, but even if you take away COVID year, you can see that this thing is still just heading further and further down. So it is what it is. Now, average cash flow minus average liabilities, it is negative 3.5 billion, where 1 year ago it is 4.5. So you can see that we are way lower, at least as of 1 year ago. We're significantly lower by $1 billion in that the average. So I'm gonna say, we had 1 year of positive, so I'm gonna say like a 5% on this one. And now here's the thing, shares outstanding. This thing is wow, just wow. So they had an initial increase right here from 5 to 4, but then after that, very consistently increasing. 5 years ago of 35.2 million shares to today of 386.2 million shares. On the 5 year, that is an increase of almost 1,000% in their share dilution. Now, that happened mainly in 1 year. I'm not gonna take that as a trend. The trend would be the previous year to the current year. Look at that, 4.32, and you can just tell by these graphs, they're increasing very consistently. So I'm gonna say, guys, 0% for this one. This isn't good at all, and I'm gonna take into account this 4.32 as a base when we make the assumptions. And lastly, cash and equivalents, they currently hold 638.4 million with an average of $428.75 million. Now, the overall grade for this one isn't that good. Net income of 20, free cash flow 50, revenue 90, assets minus liabilities 10, cash minus liabilities 5, shares outstanding of 0, overall grade of 36. Yeah, the fundamentals are really lacking. And now lastly, let's take a look at what price we should pay for this company. Now, right off the bat, we can see current price of $9.94, target share price not adjusting for debt $11.61. Wow. And then adjusting for debt $24.88, essentially 25. Does this mean that we buy, guys? Not necessarily. And well, we're going to find out exactly what prices we get when we assume these numbers. However, even if we still get a price higher than this, fundamentals should drive everything first. If the fundamentals make sense, then this should be something that, you know, you should follow, I guess you could say. But if the fundamentals don't make sense, like when it comes to this one, they're really, really bad. I don't care if this thing says $1,000, right? At the end of the day, the fundamentals just aren't there. So that's essentially how I like to invest. Now, let's input some of these numbers. Now, for the shares outstanding, we saw that from 4 to 1 year ago, or today, they're increasing at around 4.32%. So I'm going to say, at the lowest assumption, that they are going to increase or issue shares at around like -5% on average year over year, right? Which means that if we multiply that by 5, that would be a -25% share dilution in the next 5 years. So let's just put in here -25. And now for the median, let's say roughly around the same at around 4%. So let's say -20. And for the last one, let's say at around -15, right? The high assumption, -15. Now with this, then we get 914 to 1003, and then 1957 to 2149. Let's take a look at now what Seeking Alpha has to say when it comes to this growth. And we can see that they're expecting 14.87, well, for the forward revenue growth. Now, I don't, you know, for a growth company, this should be a lot higher, but it really isn't. So let's just assume that they're going to do something along the lines of like 4% for the lowest. Then let's go to around, what would that be? Let's say 7, then let's bring it up by 3 one more time, and let's say 10%. I think that's pretty fair. Doing this, we get, well, 1052 to 1418, not adjusting for debt, and then 2235 to 2978, margin of safety of 5, 10, 15, 1899 to 2829. So you can see that adjusting for debt, this thing goes up to around, you know, 20 bucks or so, right? Mid 20s. Now, not adjusting for debt, we can see that it's almost there, right? It's almost there. Actually, we're better at it we're essentially, we're essentially there for all of them. But again, guys, the fundamentals just aren't there for me. The fundamentals just should drive everything. And some of them look good, but some of them just, I have no idea where they're going. So please use this information so that way you can have the best opinions as to what to invest in, okay? Just because I'm saying that I don't like this company or that I don't plan to invest in it, or that you see these numbers, doesn't mean that you shouldn't invest into it. At the end of the day, every investment is the present value of all future cash flow, and this is not financial advice. So please do with this information as you will. The calculators are available for free, as well as the earnings report will be linked in the description below. I didn't go through it in this video, but you guys will still have it linked in the description below if you guys would like to read it for yourself. So if you like this type of content, make sure to like, subscribe, comment. It really does help her with the algorithm on YouTube as well as Rumble. Goal is 3,000 subs by the end of the year on YouTube and 200 subs by the end of the year on Rumble. So let's see if we can get that, guys. Again, the best way to help us, it is like, subscribe, comment, and of course share. We have a lot of big plans for this channel, but we really do need your help in order to grow it, in order to make those plans to come to fruition. So really is all we're asking for, just something free in return. So thank you all so much for everybody who has helped so far. We really, really do appreciate it. And now we're taking a look at the options chains for September 29th, 2023. We can see that there really isn't much of anything here on the put side, only 2 of them. And I gotta say, they're not really that enticing. For the call side, though, it's a little bit higher. We have a little bit more bids over here. But yeah, this actually may be one that if you bought at much lower prices and now you're looking at this and you're like, oh, I didn't know about free cash flow, I didn't know about the net income like the way that it was. And if you want to just get rid of them, you know what? You may consider selling an in-the-money covered call or a really close strike to the current price and let it expire in the money. Therefore, your shares get taken away, and you also get a nice premium. As you can see right here, for a strike of $10, you will get $29, and then that difference that you make based off of what you bought it from. So that might be something that you may consider. All in all, though, thank you so much for the recommendation. Really, really do appreciate it. Now, Lyft is a company that, I don't know. It's just, it doesn't really entice me. It really, really doesn't. Fundamentals also aren't there for me. But anyways, that pretty much does it for this one. Y'all can follow us on the new tech sites. Link is in the description below. So with that said, peace out, and we'll see you all next time.